Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. Today is Tuesday, October 19th of 2021. Three topics we're going to talk about that markets are paying attention to, so you should be too. So thanks for watching. Our first topic today, the 10-year Treasury. Yes, back in the center of everything today. If in case you didn't catch it, interest rates are moving and they're moving higher by way of the 10-year Treasury in this case. All rates are rising, but the 10-year is the most notable. In this case, it hit a 1.64, which is the highest that we've seen, I think, year to date at the moment. And it basically is also indicating a lot of things, and we'll talk about why rates are rising. Before we get to that, we also want to note, globally speaking, the same phenomenon is occurring. If we look at the German Bund, it's at an 8-month high, and interest rates in Germany right now are positive on the 10-year. That's a very important story because they've actually had negative interest rates for quite some time. So interest rates are rising here as well as globally. That means something. Rob, what does it mean? That means that there is growth and inflation abound. Obviously, we've seen everything from supply chain issues to basically labor shortage issues everywhere we go. So there's all this fighting in the supply chain for goods and services and people, and that's just going to be passed on to the consumer by way of inflation. Now, the Federal Reserve, again, this is a topic number 2, says in their most recent speech, ultimately, they said 89 times the word inflation. Not that they're not paying attention to inflation, but they just know that inflation is an important issue. Now, they also said, and this is where the markets are having trouble with this, is they're not going to basically change their interest rate policy or guidance or even tapering. They changed a little bit, but since this speech, this is about a month ago in the speech. But more importantly, there are two mandates. One is full employment across this spectrum, and then also 2% goal of a growth of inflation. So they think a little bit of inflation is important. The only challenge is right now, if we look at the 5-year on a go-forward basis average, which is the highest we've seen in quite some time, the 5-year average right now, just reported this morning, came in at it's over 2%, 2.37%. So that means that the Federal Reserve is going to have to pay attention to this. And so this is running hot, right? The 10-year Treasury, the 5-year forward forecasting of inflation is running hot. Well, that just then leads to our third story of the day, and they're all interconnected, I promise. I'll bring it home. We have the first crypto ETF on the New York Stock Exchange on the futures. So there are cryptocurrency ETFs out there. We'll speak more about this space on future episodes. But in this point in time today, we had a cryptocurrency that traded the futures trade today. Now, to put that into perspective for you, when in 1993, the first S&P 500 ETF that ever traded, the first day trading was 40 million in terms of total transactions. Obviously, that's many decades ago, but it wasn't too long ago. And now today, we saw the crypto futures ETF trade 700 million in its first day trading. And all of this leads to, one, the 10-year Treasury is not going to be paying attention to the Fed. The 10-year Treasury is going to be moving because it believes and it sees real inflation. It's not transitory. It's not temporary. You know, when you give a 5.9% raise to Social Security benefits next year, there's nothing temporary about that. When you have inflation, wage inflation, there's nothing temporary about that at this moment in time. So the 10-year Treasury is sensing that out. And so it's calling the Fed out, even though the Fed says, yes, 89 times we know there's inflation out there, but the 10-year Treasury is calling the Fed out. Who else is calling the Fed out? Cryptocurrencies. Why? Because crypto world is a decentralized sort of currency. Okay, it's a digital currency. A huge concept. It's kind of the new way of thinking on a go-forward basis. But more importantly, the central banks around the world, you've seen China rail against this and really have major restrictions on it. The U.S., Gensler today was on CNBC, and he's the head of the SEC, but he was a former professor in back east, and he spoke about this for 5-6 years now. So he literally knows the subject better than ever, and he says that yes, there's going to be a decentralized currency at some point in time that maybe the Feds want to create and control. Who knows? But you have all the major investment banks saying 1 year, no, they are not relevant, we're not going to pay attention to them. And then this year, Jamie Dimon of JP Morgan says yes, but he said 2 years ago, if anyone ever talked talked about it in his bank, he would fire them. And today, the investment bank is now helping and assisting $70 million worth of trading on the New York Stock Exchange. There's not a coincidence there. But that being said, crypto is also a cause and effect of they are losing credibility. The 10-year Treasury is not believing the Federal Reserve, and crypto world says no to centralized currencies. Why? Because if you look at their US dollar and our US debt and all the manipulation behind the scenes that the Federal Reserve is trying to do with regards to tools, they're trying to taper, they're trying to lower and keep interest rates lower for longer. Those tools traditionally have been, last 40 plus years in play. And, sometimes they get it right, sometimes they get too early, and they sort of, like I said before, take the punch bowl away from the party. And that literally is where we see another recession. So the Fed has caused the last 10 of the last 8 recessions. It's sort of humor in the financial markets, but there's a lot of truth to that. So now you have a force of nature right now that the Federal Reserve traditionally just had to deal with one aspect that's calling them out in terms of their policies. Yesterday used to be just the 10-year. Now you have this crypto space, and now the regulators have embraced this because now it's trading on the New York Stock Exchange. Obviously, this is a story that's just beginning. It's very exciting in the world of finance to see how this plays out. And so that's why we're going to start here and give more education on a go-forward basis. But in the meantime, what's caught in the middle right now is the Federal Reserve. So let's keep our eyes squarely on them and see how both these two different marketplaces sort of have a cause and effect, and let's see who leads who from this point forward. But that's a little update as to what we see in the market playing out, the bigger story, and how these three things are connected and interrelated. And trust me, they certainly are. So there's more to come on this. Thanks for watching, and we'll catch you again next time.